Good morning, traders, and welcome to BCR's morning market outlook. First up, let's talk about the US dollar. The DXY climbed to around 100.59, which is its highest level since mid May 2025, and is also heading towards a second straight weekly gain as investors continue to favor the dollar as safe haven amid escalating tensions with Iran. Reports that the US could launch its largest strike so far have kept geopolitical risks elevated, while oil prices remain near their highest levels since 2022. Markets are also looking ahead to next week's Federal Reserve meeting. Rates are expected to remain unchanged, but investors will be watching policymakers' outlook closely as rising energy prices may influence inflation expectations. Um, Markets are also currently pricing in only one Fed rate cut in 2026. Technically, the US dollar index traded in a consolidation range between 98.66 and 100.95 last week. Momentum remains mixed, with 98.66 acting as key support, while a move above 100.5 could see the index retest the 100.95 level and potentially the psychological level of 101. Next up, let's have a look at crude oil. WTI has seen significant volatility, surging to 113.28 last week before dropping to 75.95, and is now trading in a wide consolidation range. Prices have since rebounded back above $90 per barrel as geopolitical tensions in the Middle East continue to create uncertainty around global supply. Conflicting statements from the US officials about the Iran conflict have added to the market volatility. At the same time, speculation that the IEA could release a record level of strategic reserves has placed some pressure, short-term pressure on prices. Technically, $90 remains a key psychological level. A sustained move above it could bring $100 back into focus, while a break lower may see prices testing support near 80 and then the second support around 75.95. Next up, let's have a look at gold. Gold prices declined last week due to profit taking and a stronger US dollar, with spot gold trading around 5,100 per ounce after briefly retesting 5,000 last week. The market remains caught between safe haven demand, driven by the geopolitical tensions and concerns about persistently high interest rates due to crude prices. Attention is also turning to the upcoming Federal Reserve meeting, which could influence short-term price direction. Technically, gold remains in a consolidation phase after a rebound. Key resistance is seen near 52.39, while support remains around 5,000 and 4,993. Lastly, let's have a look at the Australian dollar, which strengthened to around 71.85, reaching its highest levels since May 2022, supported by rising expectations that the Reserve Bank of Australia may raise interest rates at the upcoming March 17th meeting. RBA Deputy Governor Andrew warned that rising oil prices could push inflation above the projected 4.2%, increasing pressure for tighter policy. As a result, markets have lifted the probability of a March rate hike to around 75%. Technically, the Australian dollar remains in a strong uptrend, trading within the 69.56 to 72.83 range. A move above 72 cents could open the path towards 72.83, while support is seen near 70.56 and the psychological level of 70 cents. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.